This is the talk of Music City Real Estate.
Welcome back to another episode of the Talk of Music City Real Estate,
where we educate and motivate all things real estate.
My name is Monty Moore with Realty One Group Music City.
Hey, and I'm Carrie Ann with CMG Financial and my mortgage team.
Every week we'll be posting a new episode chock full of Nashville real estate value.
Yes, and you can follow along and subscribe at talkmusiccity.com.
Got a question for us? Ask away at questions@talkmusiccity.com. That's questions at talkmusiccity.com. Carrie Ann, so good to see you.
So good to see you, Monty.
And we've got a really a great topic today that a lot of people are going to find, like Connie and I did, just an amazing product, an amazing opportunity, a differentiator, an opportunity to help the agent become the hero.
Yes.
Who doesn't want to be the hero?
I know.
I want to be the hero.
Always. It's the hero or the villain. We definitely want to be the hero versus the other.
I always want to be the hero.
In every story, you know.
But this is what I think can make somebody really stand out, as we were just talking with our guest today about really as an agent. There's something like, I don't know how many today, but somewhere around 18,000 real estate agents, licensees here in Middle Tennessee. What makes you different? What's your unique selling proposition? Why would somebody want to use your expertise? It really helps to have a unique selling proposition.
Absolutely. And we're excited because we have the one and only Dave Herbst with us today. He is the VP of all things all-in-one, which is the home loan that we have within CMG Financial. That is very innovative, and it's revolutionizing the today's mortgage. And so we're really excited to have you, Dave.
Thank you so much for having me, you guys.
This is going to be a good time because he is the man behind this entire product. And I'd love for you to really kind of share a little bit of the story, bring everybody kind of back. I think it started in Australia in 2001 or something. Dave,
before you get going here, I'm sorry for interrupting you, but we sat down, as we were just talking, I'm not sure, but 4 years ago, something like that, maybe.
Yeah, we've been doing this a long time, Monty.
I know, but at that time, I'm not sure that you and I were believers. You were because you were, but I wasn't yet. I was on the outside kind of looking in. And it wasn't until Connie and I decided to buy a home in Florida and be able to, first of all, pay it off sooner than anticipated. Second of all, to be able to utilize funds because our son and daughter-in-law are wanting to flip some homes here and there to have access and have everything positioned. Anyway, I just wanted to say right off the bat, I'm a believer now, brother. I am a believer, and I'm thankful. It's the first time in my 72 years on the planet that I own my home now without a mortgage on it.
Amazing.
Thank you for that.
That is so exciting.
Thank you for that.
Is it also probably the only time you've ever thanked a mortgage professional? I'm wondering.
I thank this one all the time.
I'm sure you do.
I love it.
Well, you're welcome. That's awesome. Yeah, Carrie Ann, you're right. The program's not new. It's not new to the United States. Not new for us. But it's also not new globally. It's a concept that's actually been utilized in other countries around the planet for a very long time. And also here in the U.S. in investment banking and commercial lending. It's a very simple concept, but our founder, Christopher George, founder and president of CMG Financial, was in Australia speaking at an event back in 2002, and he sort of bumped into it accidentally. He was at a conference. He was there to speak. And at that time, the government of Australia had just eliminated the tax benefit for paying mortgage interest. We still have that deduction benefit here in the U.S., but back then over there they'd eliminated that, and their industry was kind of going through a change. And one of those changes was the adoption of this type of mortgage program that we brand named the all-in-one loan. But it's something that existed throughout Western Europe, even in Canada. It's a mainstream way to borrow and pay for real estate in many parts of the world.
We call it the smarter way of borrowing, right? There you go.
Right, the smarter way to borrow.
There you go. So basically,
and build.
And build. Oh, yes. I'm excited to share about that because that's something new that we just rolled out here over the last few months where you can use your all-in-one to build a new house with it's construction funding money. Funny money.
Wow. That's
what
cool.
am I going to say on this podcast? Too funny. Hey, so talk about what a true all-in-one home mortgage is or home loan is. It is the only loan that combines mortgage financing with banking.
Yeah, with personal banking. And it sounds so foreign. It sounds so sort of unnatural, right? Because it's not the way we do things, regularly. But the concept is, as we earn money, that lands somewhere. We've got to place money securely, temporarily, until we need to spend it, whether that's for groceries or gas or utility bill or a mortgage payment. Money tends to land first in just a regular old checking account. It's a very powerful tool. It sees a lot of money. People don't realize the volume of money they actually manage through their personal checking account in just even a short amount of time, like 5 years. In just 5 years, the average American will flow more money through their personal checking account than the total amount that they owe on their mortgage. So, combining the checking account in with the mortgage itself just creates this automatic relationship between dollars owed and dollars earned to reduce the cost of dollars owed. It's a real simple concept, and when you let that sink in, it starts to make a lot of practical sense. Now we can get down into the details, and I can tell you exactly what goes on, but it keeps money liquid for spending needs. But while money is waiting to be spent on your regular living expenses, it just keeps your mortgage balance lower, which lowers your cost. It's real simple.
Love that. And it creates a lot of flexibility. Folks that are ones that are real estate agents, that receive large commission checks, maybe this month and not the next month. They are able to use those funds, like you shared, that are sitting just kind of in limbo, in our checking, or maybe just making very minimal cost on our savings. I reached out to a bank today to ask about how much I would make on if I moved my money over. And, he referenced 4%, right? And so how much money are you actually saving by paying down that mortgage and compared to making by putting that into a savings account?
Yeah. And I would add to that, oftentimes as we, look at interest rates to measure benefit, right? What's affordable, what's not, what's a good deal, what's not. It's really a decision based on relativity. That rate is better than that rate, or yesterday's rate, or last year's rate, right? And I think we also lose sight of other factors like inflation. It's 4% adjusted for inflation. As our buying power erodes over time, not just right now, but it has, and it does consistently. What we yield in return by keeping cash idle in a money market account or savings account or even a checking account on a daily basis is just constantly eroding away from us. It's transferring. That wealth opportunity transfers somewhere, and it tends to transfer away from us, right, in the regular banking and borrowing paradigm. And the all-in-one loan basically shifts that benefit over to the consumer. It's really the first consumer first mortgage product ever put to market. So money is effectively, cash dollars are effectively saving more interest on mortgage debt than you could earn, right? Even after or even prior to adjusting for inflation, than you could earn while keeping those dollars liquid in a standard checking account. It just makes sense.
So true. They so many of us that have worked hard for their dollar, that we don't want to lose our dollar, right? And that's probably why it took me so long to really appreciate the program, because I always said, I want to have it where I can reach it at any time, right? Type of scenario. And what's so great about this program, after I started to learn all about it, is you have full flexibility and full control of your equity at any time.
I think one of the things that Connie, I know, had a struggle with initially was the interest rate's not going to be the prevailing mortgage interest rate. And I had to explain to her, but sweetheart, it's being offset. Don't think about the interest rate. Think about how the value of that money that's sitting there now is going to be working for us. So it offsets any increase. From my perspective, anyhow, correct me if I'm wrong, Dave, but it seemed like it more than offsets any interest increase. That seems really just a very momentarily concerning part of the equation, it seems to me like, because it offsets it so wonderfully.
Yeah, the best mitigator to interest rate risk and interest rate costs, because let's dollarize it. I think that's what a lot of people don't do, right? They don't necessarily dollarize. I'm talking the cost of funds. When you borrow money, in which most of us have to borrow money in order to build up a standard of living that we enjoy, certainly to possess real estate. 9 out of 10 Americans borrow using a mortgage annually to make their purchase possible. So it's about 86 plus million households that owe at least one mortgage today, and collective mortgage debt is about $14 trillion in the United States. It's a very large sum of money that people owe. That's just the principal outstanding. So, this idea of that, depending on interest rate, it's sort of faulty. It's not complete. It's not that it doesn't apply or have an effect. Of course it does. Interest rates matter. But there's other factors that matter too, other variables to be specific. How much do you owe in which interest is being charged on, right? And how long are you going to take to pay that back? So time and the principal balance that you owe right now this month, it matters. They matter as well. So, what the all-in-one loan does is it shifts really the focus away, the benefit and the power of the product is really focused on reducing the amount you owe ongoingly, daily, in which interest is recalculated on, to reduce the amount of time somebody has to remain in debt while safely keeping their money liquid. So it's really focused on reducing cost of funds. Borrowing money costs money. Well, what's the total cost? I think when you ask people, when you say, what's more important to you, the interest rate that comes with your loan or the amount of interest you have to pay on your loan, you'll get an honest response. You'll get people saying, okay, I've never been asked that before, but of course, the amount I've got to pay. Why? And people are curious, are naturally curious. Why? What are you talking about? And when you show them a path, an easy way to just reduce that cost obligation that normally comes with a mortgage without relying on interest rates always being favorably lower, it certainly takes, a minute to let that set in, but it's just math, and that's where the paradigm shift occurs. And that's exciting. It makes you stand out. It makes you different when you're advocating math, in reality and putting the power, in the hands of a consumer.
And that's why we've taken so many people, even that had the 4% interest rate, and moved them into the all-in-one loan because it made sense. It gave them back the power and the control, with their own funds, which I think is a win. This program also allows you, Monty, to purchase and a refinance with it for a primary, secondary, and/or investment home, right? And so that's a huge win for our investors out there. They're loving this, right? Think about whether you have short-term rents, midterm rents, or long-term rents. Those rents are automatically, as soon as you receive them, are going down and paying down that principal, right? And saving you as the investor, cost, which I think is a huge win.
Well, as we talked on the front end here before we got started, I want to point out to all you real estate folks that are watching this, listening to it, we all want to differentiate ourselves from the masses. There's tens of thousands, basically, of your competitors out there. Most of them don't know about this product. That's just reality. And then many of them will get hung up on something that, because they don't understand it, they'll possibly, some will poo-poo it. All I can say is, with my 40-plus years in the industry, I scrutinized it. I wasn't interested at first as well. But then it kept bugging me. It kept coming back, what you'd shared, David, about that money just sitting there. Because we were, like a lot of families, we had a lot of churn, just sitting there, not doing anything for us. And then all of a sudden, to be able to put that to work for us, that money that was not doing anything anyhow, putting it to work for us while still having access to it, is suddenly, I think I got an aha moment and said, Connie, we need to do this. We need to try this out. And then we got to start seeing the reduction way faster than what we would have reduced ourselves.
Oh, and
the growth of equity, right?
Yes,
right. Because as you reduce your principal balance, you're growing equity in real estate faster. So you're benefiting in so many different ways, and that equity money is kept liquid for you guys to utilize. As you were sharing earlier, you're able to use the same mortgage product to essentially go reinvest, remodel your home, go buy another property, save for your future, use the loan maybe as an asset, a buffer asset for, into retirement. So you can draw from that versus maybe retirement funds. I mean, it just allows so much, I think, financial security built into the product, while also giving you the optionality to reduce, the cost of the mortgage. Nobody wants to pay more than they have to.
Well, you touched on a really important part of, again, from my perspective, most people watching this probably aren't 72 plus and thinking about the future, when the future doesn't always turn out like we think it's going to, as far as money in the bank and so forth. But you, as a senior citizen, I guess I am, aren't I? Well, that almost hurt to say that. Jeez Louise, I haven't said that before. I referred myself to that. But anyway, as somebody who is older and
more mature,
of course,
That's right.
You do have to look, okay, what is my capability? And a lot of folks go with the reverse mortgage, and I think that can be a good idea as well. But this, to me, made more sense than going the reverse mortgage route because it gave me that flexibility, like you said, of reinvesting in another property or something like that. Or if I decide to take a year off this year, which I'm not going to, but I could do that, which I couldn't have before having this kind of product in play.
That's right. I think it's ideal for people that are, let's break it down, briefly. The people that are most active in real estate nationwide, tend to be middle age. They're into their mid 30s to up to 60s. The vast majority of people that carry mortgage debt are actually Gen Xers. So folks that are well into their 50s. And, let's be real. There's other things to pay for and to be worried about and save for, and there's ambition. People would like to be able to execute on another investment property, grow their wealth, or save for their kids' college tuition costs or their own kids' future properties, et cetera. Plan for medical emergencies. And if you didn't have to go get multiple loans, to go help generate, the resources that you need to contend with those challenges or opportunities, if you had just one product, one big financial solution that gave you the liquidity, gave you the optionality to reduce what you owe now while you're working, but also still be there, right? Liquid for your use into retirement. So that you didn't necessarily have to go get a reverse mortgage. You could continue to use the same loan. It essentially allows you to function like your own bank. And that used to be one of our taglines, become the bank of you.
Wow.
And it sticks.
I love that.
It fits. I think a lot of people, until they know about the loan, don't know don't understand what that means. But once you do know about the loan, you're like, that makes a lot of sense.
Yeah, for sure. And, going back to what you were talking about, having access to your equity, this is the only loan that allows you access to your equity for full 30 years without having to refinance, right?
Wow.
And that's a huge win for those folks. With going back to kind of the loan that so many people know, we've
You saying I could write a check at 100 years old? I could go ahead and write a check 30 years from now?
Yeah. If you,
awesome.
We
That's
don't,
cool.
We don't discriminate on your age there, Monty.
That's cool.
But going back, the loan that so many people call me for, right, is that 30-year fixed mortgage, right? Mm-hmm. That's the loan that was welcomed back in the Great Depression. My grandmother told my mother about it. My mother told me about it. I then got one, right? Mm-hmm. That's kind of the way. And so when you have that, you're putting money down, but you don't have access to that equity immediately, right? You would have to then refinance and do a cash out, or you would have to do a second mortgage, right, attached to that. So this is a huge win. Again, bringing back complete control of your money and allowing you to do it for you, meaning you may be somebody focused on retirement. You may be another investor that wants to snowball one and take the equity out and purchase another property, right? And then snowball that one and continue to build wealth through purchasing real estate, with this concept. So that's a win. Or you do want to just pay your mortgage off, right? So there's multiple different ways that people utilize this program. I think is a win. We just rolled out, and I'd love for you to speak into it, our construction portion of this loan, which I think is a huge win.
Yeah, it's igniting, so much activity. I think we did a good job as a company, sort of creating some pent up demand. Started promoting it, maybe even quite a few months earlier than we released it. But it's a phenomenal product. So let me break down the product very quickly, just foundationally. So the all-in-one loan is a first lien position, 30-year draw, open-end mortgage, otherwise known as a line of credit. Right, so it's a first lien position, 30-year accessible line of credit that comes with an integrated personal checking account. And the personal checking account is also known as a sweep account. Sweep just means automatic transfer, secure transfer. So when somebody uses the all-in-one loan to purchase a property or maybe refinance out of a current mortgage for their current property, and they make a deposit into the checking account, it's fully transactional, FDIC insured. That deposit's received. It's available for use. Any money that's not used that day is transferred or swept to the line of credit, paying down the principal balance by that same amount. None of that's interest. So it's the only mortgage in America that pays principal first through the entire term. And the way you pay principal down is simply by making a deposit. We're actually converting a deposit, a cash deposit, into home equity dollars. And the mortgage becomes the storage place for idle money. And then you can freely spend it as normal. So you have to pay a cell phone bill tomorrow. Well, you just do that online, and it comes right back out of your mortgage. Your balance, principal balance, goes up by your expense, but the bulk of your money kind of loiters around waiting to be spent on items. And while it's waiting to be spent, it's saving interest because the interest is recalculating nightly on that lower balance. So after the end of the month, people have a lower interest payment obligation, and it just lowers interest ongoingly. It's a decreasing payment system, right? I mean, imagine that. Don't have to wait for rates to come down. You don't have to continue to refinance, and your payments coming down. So take everything I just described and go build a brand new home with it. I mean, it's phenomenal. So a lot of dreamers out there, myself included, would love to go buy a chunk of land and build my forever home there, the place I'd like to retire. So we introduced a one-time close construction to permanent product out of the all-in-one loan. Same terms, 30-year draw, sweep checking account. The only difference is we're not going to fund the entire line of credit, at closing. The line is going to fund construction, per the builder's draw schedule. And the builder, we work with builders across the United States. And so they map that out and we approve that. And the financing comes off of the line of credit. So the principal balance grows to fund the construction. But in the meantime, the customer is able to engage their construction loan by using their cash flow to beat back that principal back down and lower their interest payments. The minimum payment on the loan is just interest, but anything you put towards it goes directly to principal to lower your interest payments. So, what somebody gets is a brand new home and a lower principal balance owed, less interest cost coming to them each month, and equity. They develop equity in their property even before it's finished. And that's liquid. There's no conversion or modification. It's a one-time close. And they still have the rest of the 30-year term to utilize their money and finish the backyard or furnish their property or continue just to pay it down fast. It's a phenomenal way to build new homes.
It's amazing.
Wow, I love that. I love that.
Yeah. And, speaking into this loan, because I know so many people out there are super excited about it. It's not for every household, right? It's not, it is, you do have to, qualify for that. You do want to make sure that you do have more income than you do as expenses, right? So for the families that are working really hard every single month to offset those expenses, this may not be the loan, for them. But again, there's so many out there, and real estates in general too, that we've been recently able to refinance. And the stories like yourself just brings me joy. And another real estate agent, she paid her house off that was projected for 24 years, I think in 18 months, right? And she's just been sitting on a nest egg planning for tomorrow, right? And kind of the same story that you referenced. And now she has access to that and not having to worry, and so that's
a huge burden. I got to tell you, my son was one kept pushing, Dad, you need to, because he really focused, young man, really focused, in 5 years paid off his $350,000 home. But I was always making fun of him that he couldn't even eat, Roman noodles or anything. I mean, they were really focused on this effort. But he did plant the seed as well as, I need to be looking at having someday a home paid for as well. That's where he helped me get there. I'm sure I couldn't have done it. I wouldn't have done it if it hadn't have been for this product helping me get there quicker and keeping the momentum going like that. But one thing I want to make sure that we say to our viewers, our agent viewers here is, guys, I started to share earlier about the importance of having a unique selling proposition, something that will separate you from the other 18,000 realtors here in Middle Tennessee. We're not branding. I'm not branding this effort with our company or something. Well, I guess I am a little bit here, aren't I? I just forgot about that part behind us. But my point is, take this for what it is and share this with your brand on it, with your name on it, with your number on it. Share it with all the financial people that you know of here in Middle Tennessee or wherever, I guess. I mean, anywhere in the country, I guess, right?
Yeah, absolutely.
How many states do you work in?
Yeah, all states.
All states. Okay, there you go. So, and do that so that you can really and then and delve into this so you truly understand it, so you can explain it. It's not that complicated. It's something new. None of us like something new sometimes. It takes a minute. But then when you start weighing the advantages versus the disadvantages if it's in the right place in your life and economic situation, so forth. I really believe in it, so much so that's why we wanted to stop and say this again with you, Dave. And again, I want to underline, agents, please, you're just another voice out there. If you don't differentiate yourself, this is a platform where you could do that.
Oh, and for agents too, Dave, we speak about, this is the only loan that's never had a default, or a delinquency, right? To think we made it through COVID at the time, right?
Wow,
or the
that's a good
market
point.
shift, right? And the folks that were on this loan were able to still live. And we talk about, where they were eating ramen noodles, this is the whole concept of this loan is for you not to change your lifestyle. Right. You're just living your life like you normally would, and allowing those extra funds that just kind of sit idle there to really work on your behalf. Right. And so those agents that receive a large paycheck one month and then no paycheck, or the market shifts immediately, you're able to still breathe, right? Because you have access to making sure a house payment is paid. You didn't have to worry about the deferment during COVID or this or that, and then the interest on the backside of your loan and all the things, right? You're able to just continue to move everything in a forward direction. So I think this program, so many are on it, and we're continuing to share the word, just to help others, to create that financial freedom, that flexibility, and also give you back, control of your own funds. So what else would you share, David?
Just to add that. Yeah. Very briefly, I think a lot of people don't realize the history of mortgages, and I won't bore you with all that, but the reality is that standard mortgages were put to market to help develop an emerging market post Great Depression era. The goal of the government was to sort of ignite the economy, and obviously a huge component of the economy is housing. How do you kind of change a society from being renters to homeowners? Well, you make it easier to borrow money and repay that money over time, and out of that quest was the forward amortizing mortgage, and the development of HUD and FHA and such. But think about it, we behave very differently today than we did in the 1940s. We just do. We're much more mobile. We there's much the financial markets and systems and journey is much more complex. Prices are significantly higher. Back then, the cost of a house on average was only double that of annual income. Today, it's about 7 times higher. Just in the last 12, 15 years, the cost of a house has risen more than 20% higher than wages. So, this affordability gap continues to, widen. And it's time for some innovation. It's time for a different way to do it. This just represents an easy way to use money people already earn through a financial tool called a checking account they already know how to use, to just place money against the mortgage debt they have to commit to lower the impact of it. It's real simple. It's automated and done for them. And I think what it does is it asserts much greater confidence in financial security. If we can reduce the cost of real estate without relying on prices to come down. Nobody wants their home's value to come down, but we would like to pay less for our mortgages, right? So Amen. This is the way you do it.
Wow.
It's just very simple. And this is, like you said, Monty, it's a great way for agents to stand out. You got to finance this property. Let's reduce the cost of the financing side of it significantly. Tens of thousands of dollars completely avoided. Why not?
Yeah, those people that are self-employed, the ones that are on high commission earning W-2 jobs, right? Again, just those folks that really have more income as a household than they do expenses would be a great candidate, for this particular home. And you spoke about mobile. Again, you do have access, I think, probably in your pocket, a debit card that you could use at any time, right? And so you always have flexibility, to your funds. There's some really creative ways that allow so many to save even more, money on their interest, right? Instead of swiping that card for a Starbucks, you might utilize, your credit card and gain all the points and all the bonuses and all the bells and whistles that you get. And then on the 20-something day, pay that off
that bill.
You pay that bill, right?
You keep your all-in-one loan balance lower for longer,
right,
in which interest is being recomputed on. So you're now really engaging the debt instead of just allowing it to be this ball and chain. You're actually utilizing it as a tool, and you're kind of doubling up up on the rewards. If you think about it, you're getting one reward over here on a credit card spend. Maybe that's for airline points or whatever else, but you're also getting this reward, out of your mortgage in the form of interest savings. It's the equivalent of you depositing money into a checking account and your bank just simply saying, let's pay you an interest rate equal to your mortgage, right? And we're going to cut you a check at the end of every month. And we're going to cut you a check based on your daily balance in your checking account at a rate equal to your mortgage interest rate. What would you do with that money? Well, if you put it in your mortgage, you'd begin to pay it down faster. This is all we're doing. We're just consolidating where money hangs out, so we can save people money on their mortgage cost. But like you say, Carrie Ann, you're flexibly liquid. So ATM, debit, Visa cards, check writing, online banking, mobile banking, full feature checking account, fully secured.
And does everybody have access to this particular loan that incorporates the mortgage with the banking, or is this a CMG product?
So it's a CMG proprietary product. We were actually awarded a patent right around 2011-ish, nice. Which is a cool milestone. And I don't know if that patent would hold up in court, but it was a great achievement. I don't know that another mortgage product actually has ever been awarded a patent, a U.S. patent.
Wow.
But the banking side of this is actually facilitated by one of our partners. We have a deep partnership with a bank that services nationally on our behalf, and they do a great job. And that's part of the education component of this during the sales cycle.
It's great. So this is offering lots of opportunity for so many. Like we said, you can use it to purchase and/or to refinance on a primary, second, or investment property. And how many of these can you have at one time?
If it makes sense for somebody, we can allow up to generally about 3 to 4, honestly. And then sometimes it may not make sense, right? Because then people are like, where do I put my money?
Sure.
It's kind of the all-in-one is really it's not the all-in-4. But there might be enough cash flow, like say rental properties,
right,
where it might make sense to hey, just drive your rental income through that one on your rental property, and maybe use your regular income on your primary residence to drive that down faster too. A lot of ways it makes sense to have multiple ones, so people can have up to generally 3 or 4 of these.
Yeah, and Nashville's a booming market for the rental space. With many folks that have short-term rent opportunities. Even the midterm marketplace here is big, so that gives a lot of people flexibility to get that mortgage paid down and give you back access to those funds to do other things. So this was great. We're so very grateful for you to be with us here. But
it must be.
He always wants to get the last word.
No, I don't. I really don't. But I just want to say back to you, thanks again for joining us today and sharing this. You do an amazing job simplifying it, but it must be cool being you to be the flag bearer of such an awesome life-changing product. It changed our life, brother. I don't have the pressure that I used to having a mortgage. I was able to take advantage of this opportunity. I encourage everybody else to consider doing the same thing.
Yeah, and to learn more, you can head to theallinoneboost.com, theallinoneboost.com. That is where you're going to learn all kinds of things there, and we'd love to talk more about it. You can always reach me at 615-456-4456. We're here to help continue to spread the word and help you save even more money in your interest costs with the all-in-one loan. So thanks. Shanks. It's time for me to get going. Hey, so thank you so much, Dave, and thank you everybody
awesome. It's been awesome.
for joining us. You've been listening to The Talk of Music City Real Estate.